All right, I am going to talk about guidelines for hiring an accountant. There are four areas of expertise that you should be looking at, or that they would do. One is business advisory services. They're going to do business plans. They're going to do personal financial plan, and just help you guide your business into the future. Expand this a little bit. The other would be the normal accounting and record keeping. They're going to do bookkeeping for you, set up your internal systems so that you have internal controls, especially if you have employees. You want to have internal controls so that somebody's not embezzling money or just helping themselves to cash. They're going to produce financial statements, consulting based on your financials. They're going to actually tell you what's in that financial. How are you doing? Are you doing good? Are you doing bad? A lot of people that I know in small business kind of run by the checkbook. If there's money in the checkbook, they think they're doing okay. That's not always true. And then payroll. They do payroll, the general bookkeeping, and that kind of stuff. Another area would be tax advice. They're going to keep you compliant in your taxes, or they're going to plan for taxes in the future. Should you be a corporation? Should you stay a sole proprietor, an LLC? Should you get a 401k, SEP plan, stuff like that? It's all planning that should be looked at when you're doing your taxes. And then the last one is auditing. I don't do any of that. That is an area I don't even want to go to. Most companies that get audited are being required by their bank or an investor or something like that. I doubt that anybody here would have to get an audit. And then when you're choosing an accountant, look at that accountant and what do they do for services. You know, are they going to be able to advise you on your taxes? Do they do the bookkeeping? Do they know financial statements and how to interpret a financial statement? Are they going to give you a cash flow statement, which is working on your checkbook, but along with that a profit and loss statement, which is telling you how you're doing it. Are you doing it accrual based? Are you doing it cash based? There's a lot of different things that go into being the accountant in that service. Management consulting, and then compiling the financial statements. If anybody has a loan and the bank is looking for financials, they'll take your QuickBooks. Some of them take that without any question at all. And then they come to me to get their taxes done, and it's like, wow, this is way wrong. So a lot of times the bank is asking for some outside firm, an accounting firm, to compile financial statements. They're going to get a balance sheet, profit and loss statement, a cash flow statement, and a retained earnings statement, or owner's capital statement. All four of those tell you a different aspect of the company. The profit and loss is obviously a period of time from January 1st to December 31st. This is how much you had in income. This is how much you had in your cost of goods. How much did you make any money before or after the sale? As soon as you sold, that's before your rent, your automobile expenses, and all that stuff. That's looking at that profit and loss. Tells you a number of things about that company. Are they pricing their product correctly? Okay. That's where you get to the gross profit. Are you making money at gross profit? If you're making if it's a loss, you might as well fold up right now, because you can't pay for your rent, you can't pay for any personnel, anything like that. Okay? So the P&L is telling you a time period. What time period are we making money? The balance sheet is telling you where you are the day of that balance sheet. So you're looking at December 31st. I had $1,000 in the checkbook. I had accounts receivable of $10,000. I had accounts payable of $2,000, and I had a loan for $8,000. Overall, I'm doing good. Okay, I'm at least solvent. The cash flow is again a time period, taking it from January 1st to the 31st. It's taking that net income and taking out your non-cash items, which are your depreciation, amortization, accounts receivable. You gave somebody credit, you didn't collect that cash yet, okay? And it's getting down to operationally, how much money did you make? After that, did you have to finance? Did you get money from the bank? Did you pay back a loan? Anything like that. It gets you down to the cash flow for the business. That's the checkbook. If there's money in the checkbook at the end and there wasn't at the beginning, your cash flow is going to show you a positive cash, okay? And the other one is the owner's capital statement. Basically, it's saying you own the company. This is how much capital you had in it at the beginning of the year. You made income, you took some money out, here's how much capital you have at the end of the year. So those are the 4 statements that an accountant would compile for you to give to a bank. A bank looks at that, and hopefully the banker can read those and he understands where you are as a business. Another service would be the information design and implement, or system design and implement. That's going to be a lot of the QuickBooks, Peachtree, any of the off-the-shelf accounting products. Your accountant should be able to tell you how to do that, how to get information out of that. He should be able to get the information to his office and figure out how to create these financial statements and tax returns and everything from there. Another thing to look at when you're looking for an accountant is the personality. You know, I mean, it seems simple, but if you don't like your accountant, you're not going to call him when you need him, okay? So you should, when you're interviewing accountants, you should sit down and talk to them. What are they like? Are they giving you the information in terms that you can understand, okay? Are they generally nice to talk to? I mean, they're constantly looking at their watch or their whatever. Sit down and interview your accountants. Figure out which one is going to be for you. Which one do you like talking to? You know, obviously if you talk too much, you know, the bill's getting higher and higher. You know, so don't sit and talk about deer hunting or whatever. But you gotta know that you're going to be willing to call them when you have a question. Because if you don't, it waits till the end of the year, and by that time the problem could be just humongous. Okay. And then obviously fees. You know, you've got the different accountants. A CPA is probably going to charge a little bit more than an accountant, who charges more than a bookkeeper. All right. Which brings me to the next thing is, do you need a CPA? Do you need an accountant? Do you need a bookkeeper? Okay. The difference between them, if you don't know, a bookkeeper is basically data entry. You might do a couple maybe reconcile the checkbook, but they're basically taking your checks and your deposits, they're putting them into whatever software, and whatever they put in, that's the way it comes out, okay? Normally, actually I've seen bookkeepers that have no education at all. They just hung up a shingle and said, I can do it, and they do it. Yeah, sometimes they're good stuff, but not very often. Okay, so check out what do they have for an education, and how far did they go with that. The next would be an accountant. Accountants usually have either an associate degree, 2-year degree from TC, or they've got a 4-year bachelor degree. Okay, they're going to get a little bit deeper. They're going to be able to reconcile loans and tell you how much interest did you pay on that note, how much do you have left to pay. They're going to do accruals, different expenses that you have out there but haven't paid for yet, and they're going to give you generally accepted accounting principle financial statements. Okay, and then the next one is the CPA, and the difference between the accountant and the CPA is the CPA sat for the exam. They're licensed with the state. They have to get 40 hours of education every single year. Okay, so you're getting that assurance that they're keeping up on the stuff that they're doing. All right. I'm getting to the end here. And then my last note on this is just make the most of the relationship. Wow, that was bad.
Well, that's a Freudian.
Make sure you're a receptionist too. No, make the most of the relationship. Like I said when I was talking about personality, if you're not going to call them, why even have them? Okay, just you go out, you find, you should have an attorney, a banker, and an accountant. That every business should have those 3 for sure. You got to talk to them, because if you wait it's too late. Well, not too late, but it's just a bigger mess. So I don't know where I am time-wise.
Yeah, we've got time left. But,
Okay. I could take some questions.
Yep. I actually have a question.
Okay.
I rarely see in any of the financial statements I get, when I was in banking or even at Advance, a statement of cash flows.
Really?
Really, which I'd love one.
To have a compiled statements, that is one of the statements that have to be in there.
Okay, okay.
There's AICPA dictates 4 statements: balance sheet, income statement, cash flow, and retained earnings.
Okay, and maybe they have it and they're not sending it, but
Yep.
My question is, I'm trying to learn how to do the books myself.
Okay.
I have an old associate degree in accounting, so I know a little bit. But there are times when I have questions about maybe accruals or year-end stuff. Would a firm like yours or others, would they do consulting, kind of help me through it?
Oh, sure.
So it's not just one side or the other, you can help somebody do their
Oh,
own?
definitely. I have a number of clients that do their own, and then we take it on a periodic basis and we make the financial statements. So they do the bookkeeping themselves. We take the QuickBooks at the end of the month or the end of the quarter. We go through and we look at the accruals. We make sure that what they're doing in there is correct. Give them advice on how to fix it, and then produce a financial statement that they could give to the bank or whatever. And obviously do the consulting with the client to say this is what we see in the financial statement. So, yes.
I want to just ask you about how to see the financial statement cash flow. In the financial statement cash flow, do you reporting all the gross and the expense, or you just take the net?
Nope, you're just taking the net income off of the profit and loss statement.
Okay, that's
See
what I
that the
thought.
four statements work together.
Yeah.
The balance sheet is giving you the date that you're reporting.
Right.
The P&L, the profit and loss statement, is giving you the time period. So if you're looking at a year, it's giving you a calendar year. That flows into the equity section of the balance sheet. The cash flow is taking your cash that's in the top of the balance sheet and telling you how did I get from the profit and loss to that cash. Okay, so it's reconciling that. And then the retained earnings statement is telling you from January 1st or December 31st the year before to this December, what happened in that equity section. Again, it's involving the income.
All right, thank you.
Anything else? All right.
Any other questions? Okay.